Hello and welcome back, everybody. I'm Stephen and I'm a popular investor on eToro. And my username on eToro is bees84. Thank you very much for listening to this video today. And as usual, guys, I would really appreciate it if you could please take some time to this video and subscribe to my channel. That will be awesome. I will really owe you one. Before I get started, I just wanted to say that this is going to be a little bit shorter than usual video, and I'm actually going on vacation tomorrow, so I'll be on a long flight tomorrow, and I will be constantly managing our portfolio whilst I'm away, but I won't actually have my recording equipment, so there won't be a video for the next couple of weeks, but I'm managing the portfolio and I will try to give you written updates every week as usual over the next couple of weeks before I can start recording my videos again. So in today's video, I'm going to be talking about what happened in the markets last week. And I'm also going to be talking a little bit about my strategy, some of the small things that I've done to keep our portfolio balanced, and also describe a little bit about the future and some of our future strategies. So let me get started. Okay, so last week was a tough week overall for our portfolio. Won't hide away from that. Main reason our portfolio was down about 2.81%, and the main reason really last week was crypto. And we have a decent amount of crypto within our portfolio. Bitcoin and the other altcoins were down quite significantly, and that is, which I'll go over in a bit more detail later in the crypto section, because there was a build-up of leverage which happens in crypto, and that caused a lot of weakness in the market, and it caused a lot of people to be liquidated, and we saw a lowering of price. This is pretty normal during that we've had such a big rally in 2023 so far, and it's part of the kind of process of investing in crypto and investing in Bitcoin. So you have to stay patient with that, because when it goes right, the increase in our portfolio can be quite considerable. So it's an asymmetric risk trade. So also last week, the S&P and the Nasdaq suffered a small dip. So the Nasdaq was down about 0.4%, the S&P a little bit less at about 0.1% down. And the 𝗁𝗄𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃𝗃 4%, but it wasn't much. But as you can see, Bitcoin was down about 8.86%, which seems very large in the grand scheme of things, but Bitcoin is actually up 64.69% for 2023. So you've sometimes got to zoom out and say what a great start to the year Bitcoin has had this year, despite last week's drawdown. If we look at our portfolio from a year-to-date perspective, we're still doing pretty well. We're still outperforming the major indexes. Our portfolio is up about 17.8% overall for the year, which I'm really pleased with. The Nasdaq is up about 15.3%, so we're outperforming that. Obviously, that has some quite high beta stocks in it, as well as the S&P 500, which is up about 7.7%. The FTSE is up 6.03. The Hong Kong index, which we have some stocks within that index, is up about 0.9%. And Bitcoin, as I said, is up a whopping 64.69%. So what did I do last week? I tried to take some of those losses from the broader kind of long-term portfolio by doing some short-term trades and positions. I did some short-term trades in the Spanish 35 index, as well as some short-term trades in the UK 100. I also did some short-term trades in the France index as well. So I've been focusing a lot on trying to hedge out some of our long positions around the world by doing short positions in indexes, which I expect Europe to be a lot weaker than some other countries around the world, especially because of their interest rate policy, and they're quite far behind the curve that they are in the US about increasing interest rates. I think that's going to go on longer. I think inflation's a lot stickier in Europe, and I generally think that it's quite a good hedge to be short some of these indexes in Europe. I also have some hedges in place as well in terms of crypto as well. So my main thinking is I have these kind of long-term crypto positions, projects that I think are going to be really strong in the future. Bitcoin, Ethereum, 𝗃_bar, many Polkadot, many different projects that I'm actually bullish on long term that I want to keep it in our portfolio. But there are some projects which I think are a lot weaker. So they're either dead, they might be meme projects, which again is quite difficult to short, or they could be, just projects that just don't have a long-term future. And I think Ethereum Classic is a pretty dead chain. I don't think really anybody uses it. And also Bitcoin Cash, I'm also not bullish on. I think that there is only one Bitcoin. So I do like to sometimes do short-term sell positions in some of the weak currencies. But so by longing the cryptos that I'm really excited about for the future and I think have a good use case, and shorting some of those dead legacy projects, I think that this does give me some downside protection as well. I also closed a longer term position last week in XLP, which is basically a consumer staples ETF. And the reason why I did that was really to free up some excess cash so I could invest in further areas which I think have more future upside. So that was a good trade overall. And I experienced some really good profits. I think it was around 15 to 20% on that. Okay, so as we move on to the main news from last week, as I said, Nasdaq and S&P suffered a very small setback. It was nothing major, but there are some concerns that a recession could be on the cards over the next kind of 6 to 12 months. So just some statistics around that. 88 S&P 500 index companies have reported earnings as of last Friday, set with 7% of those firms suffering a much larger year-over-year decline in earnings. So this could be a recession indicator that there are companies that are suffering, and that we are starting to see now that decline in earnings, which could potentially trigger a recession in the future. So it's worth keeping an eye on those types of statistics. We've also seen last week, we did see some notable upside in which we're seeing some improvements in the banks. As you will know, they were caught up in the regional bank crisis over the last kind of couple of months. But there are growing signs that some of those withdrawals that were happening and those bank runs have started to stabilize, and that is because of the Fed's program to shore up the regional banks, etc. However, we are seeing a lot of those funds or people in those regional banks, they're moving to the larger banks, which they expect could be a lot safer. But they are starting to stabilize now, which could be seen as a positive indicator. There's also been signs of weakness in the labor market. It's been historically a very strong labor market recently, and they've continued to try and increase those interest rates, and they thought that would have an effect and could start to weaken the labor market, and it took a long time for that to happen. We're starting to see signs of that happening, but it's being seen as two things. So it's obviously being seen as a negative because there's a worry that it could take quite quickly and people could lose their jobs, weaken the economy, etc. But there's also some positive news as well about that, is because people also think that by that starting to increase, by the weekly jobless claims starting to show weakness, this means that it might be likely that the Federal Reserve could start to dial back on rate hikes. They could halt them, and they could even completely do a kind of a U-turn over the next kind of 6 to 12 months and experience a pivot. So it'll be interesting to see how that develops, but the market is very undecided at the moment whether that is a good thing or a bad thing. The Eurozone business activity has also begun to pick up in April. We've seen very strong results by some of the European indices over the last couple of months. However, I do see that starting to decline. I think that's going to start to decline towards the end of the year, and that's why I am quite short on some of the European indices. We also saw minutes of meeting for the last ECB meeting in March, and which said it was actually a split decision over whether they would raise that interest rate by 0.5 percentage points and 0.5%. They did decide to go ahead with that, but it just shows that there are different policymakers which have different opinions on that. So again, at the next meeting, could we see another 0.5% increase rise, or will they just increase it by 0.25%? Either way, I think it will be increased at the next ECB meeting. I don't think they're ready to pivot or halt those rate increases because inflation is quite high. We also saw UK consumer price growth in March, which was better than expected, to 10.1% from 10.4% in February. And this is mainly driven by very high food and drink prices. So really, inflation's not really under control either in the UK or in Europe yet. We've also seen in China, the markets have suffered quite considerably over the last couple of weeks. We've seen data that says that China's GDP has expanded a better than expected 4.5% in the first quarter of 2023, and that is from a year previously. Last year's pace was at 3%, but it has to be said that last year was extremely restricted because a lot of China was in lockdown and many businesses were closed, etc. So anyway, I do think that China is going to take a little bit of time to grow after those stringent regulations have been pulled back. It takes a lot of time for some of those workers to go back to work, for everything to function, for manufacturing to increase, for exports to increase. So I think people just need to be a bit patient with China, and I think the second half of the year should be a lot better than the first half of this year. We also seen the People's Bank of China. They have injected more money continuously into the system over the last kind of year or so. And this is very different to what's been happening in the US and in Europe, where they've been doing quantitative tightening, been doing more quantitative easing in China. However, what it was increased to by 170 billion renminbi was slightly less than expected in the medium-term lending facility, but I don't think it's any cause to concern, and I'm still very positive about Chinese equities moving forward. Okay, over to the top 3 performing stocks of last week. And the top performing stock last week was actually Amazon, which was up by 4.5%. Excuse the typo there. The second best performing stock for last group is the Endeavour Group, and that was up about 2.29%. That's done quite well over the last couple of weeks, mainly I think because of the acquisition has gone through with the WE. So now Endeavour Group not only owns the UFC, but also owns WE, which is a very successful business as well in its own right. So I think future looks pretty bright for the Endeavour Group. And ThyssenKrupp was up about 1.87%, but it has to be said that after recording this video on Tuesday, on Monday it has gone down significantly since then, but I'll talk about that in forthcoming video. So on to our Death by Charts edition. I just wanted to outline 4 different charts. I'm going to run over this quite quickly. So the first chart I wanted to go over was the annual growth rate of the US economic index. And really what I wanted to show in this chart was the year-on-year growth rate in the leading economic index has fell further into negative territory in March and is at levels that have signaled a recession in the past. So 2020, 2008, 2001. So we're coming to that point now where in the charts, it's looking like we could be slipping into a recession. We also seen the chart to the right is the Philly manufacturing index. And what we've seen is that has moved down to -31. And that's the lowest again since May 2020. Again, that was just as COVID was coming into fruition and we were going into that kind of mini recession. In the past, every time this indicator was at those levels, the US economy was either in or approaching a recession. So more signs that we're actually moving into a recession, but we just don't know how, even if we do slip into that kind of recessionary territory, we don't know how the kind of monetary policy and the Fed are going to react to that. Could they put in quantitative easing again, for example? So just because these data is showing that we're going to recession doesn't necessarily mean stock prices are going to crash considerably. Third chart I wanted to show is another real sign really that we could be heading into a recession, and that is the Netflix revenue growth. I don't own Netflix in our portfolio anymore. I used to, but I have pulled back from a lot of tech stocks and growth stocks in our portfolio. But what we've seen is Netflix Q1 revenues were at 3.7% higher than a year ago. And although that is showing growth, that is the second lowest year-on-year growth rate in the company's history. So we are starting to see now, after some people have lost their jobs, some inflation is hitting everybody's wallets, cost of living crisis, higher energy costs. I think we're starting to see that trickle now into consumer spend, and they're looking to cut back, and Netflix is obviously a discretionary spend. Fourth chart and final chart that I just wanted to show you is really to do with the kind of regional banks. And really what I want to show you is that what's happened is a lot of people have withdrawn their funds from some of the smaller banks. They're a bit worried after the Silicon Valley failure. And what we're actually seeing is a lot of money moving into some of the larger banks and institutions such as JP Morgan, etc. And they've seen an estimated 50 billion increase in deposits. That is because consumers see those large banks as being a lot safer, much more stronger balance sheet, more likely to be bailed out, etc. if they went into any big problems. We're seeing a lot of inflows into those larger banks. Okay, so crypto news and views very quickly. Last week, crypto suffered pretty significantly. As I said, there was quite a lot of leverage in the system that had built up. When you have periods where crypto is going up, and it's had a very good year in 2023. As I said, Bitcoin's up over 64% or so. And what happens is people get more and more confident. You start to see more leverage in the system. And when you see a pullback, then what happens is a lot of people get liquidated, and those who have the highest leverage get liquidated first, and that kind of cascades down, and you see these kind of big weekly drawdowns, and that is what we had last week. This is relatively normal, even if we are now out of the bear market, which I think we are. I think that we've already hit the lows of what we will hit in this cycle. It's not uncommon to have dips within that crypto spring. So don't be surprised to say, oh, maybe we're not in the bear market anymore. Why is the market going down? And it's very natural for there to be dips in the market overall. So don't worry so much about those. 3 pieces of news that I just wanted to go over. One is Celsius. We all know that Celsius customers were not able to withdraw funds anymore from Celsius. And what's happened is actually lots of consortiums have actually come together to try and take over Celsius, take over the current customer base, what they're owed by Celsius, etc. And there's lots of different groups getting involved. So one of those groups is Coinbase, as well as Gemini are involved. Arrington Capital are also involved in that bid as well. And it'd be pretty interesting to see what actually happens with Celsius moving forward if it is taken over. and what type of funds that the customers that had funds in Celsius previously would be able to get back. Obviously, a lot of will be eaten away by legal fees and other costs, but it could be a positive thing if it's taken over by one of those larger exchanges or larger funds. Good for customers that have lost funds in Celsius previously. Second thing that I wanted to go over as well is Coinbase, and the Coinbase are currently suing the SEC at the moment, and there's been a lot of talk about Coinbase potentially moving offshore to other jurisdictions. That is because they're becoming increasingly frustrated with the regulations in the US by the SEC. They're saying they're not spelling out clearly the regulations that need to be adhered to by crypto companies, and this is causing a very large gray area and really restricting their business moving forward. So they have recently just decided to put in a lawsuit against the SEC, really asking them to make regulations more clear. So last chart I just wanted to show you was a Bitcoin chart, and this is the Bitcoin net unrealized profit. And really what this showing is the Bitcoin prices over time and where they are in that kind of emotional stage. So capitulation, hope, optimism, belief, and euphoria. And what you saw really around that kind of end of 2022 as prices went down after the FTX collapse down to 15,400 or so. That really was in the kind of capitulation phase. And now we are starting to move from that hope stage to the optimism phase. There's a little bit of anxiety around by that optimism stage. And it'll be pretty important that we continue to sustain these levels, or at least stay in this broader range, which I expect, as I said at the beginning of the year, expect from 20,000 to 45,000 throughout that year, but it could fluctuate pretty significantly throughout the year, depending on not only the macro situation in the markets, but also what's happening with Bitcoin, crypto news, and the whole ecosystems, regulations, ETFs, etc. So we need to keep an eye on that, but it's looking pretty positive still moving forward. So thank you very much to all my new copiers that have joined recently. Thank you to the loyal copiers that have been copying me for a long time. I really appreciate each and every one of you. I understand that your money is very precious to your future, and I will ensure that I try to safeguard your money as much as possible, and I try to grow it in the future with you. So please stay patient with me. And if you haven't joined my Discord group, please, excellent opportunity to join my Discord group now. We have a really great conversations every day where we talk about market situations. Everybody is able to ask me questions at any time. You're able to interact with a lovely community of people who are similar experience levels to yourself at investing. So thank you very much, and I won't see you for a few weeks on video, but have a great week ahead, and I'll be in touch. Thank you very much.